Hi guys, welcome back to my channel. If you guys are new here, my name is Mel and welcome to Trade with Mel J. This is the channel where we talk about stocks, whether it be investing, trading, money mindset. And today is the first day of the new money stock series that I mentioned in my previous video. And if you're new here, please do go ahead and like and subscribe. Help me grow my channel. I did mention in my previous video that I have a goal to get my channel to 500 subscribers before the end of this year, so please help me, join me in reaching my goal. But yeah, so the new money stock series, this is a series that I wanted to start to basically help the people who can't, just sit around and look at stock news, whether it be a job or, other obligations that you have, and you really can't make informed investment decisions, which what I'm speaking on is technically not financial advice. It is financial education only, but you can hear what I'm saying. I look at the news pretty much daily, and if I'm not looking at the news daily, I'm always checking my phone for new events that's coming out, whether it be earnings reports, economic data that may be coming out, and that way you're listening to me and you'll kind of get in the mode of thinking the way that I think when I'm thinking about how I'm making investment decisions. So yeah, the new money stock series, I'm calling it new money because most of us, we probably don't come from money, whether it be, historical reasons or circumstantial reasons. So this is my way of giving the knowledge that I do have. I'm not all knowing, but what I do have, I want to give it to the people who, want to know how to make money and change the narrative for their family and create new money. We hear old money so much, but a lot of us, we don't know what that means. We hear it, we know people do, come from money. We call it old money, but this is my way of helping to create new money and new generational wealth that we can pass on to the people who are coming after us. Okay. So the setup would be, we'll talk about things that happened last week, the previous week, and then we'll talk about what's coming up, whether it be stock news, economic news. And then at the end of the video, I'll be doing something what I like to call Trader's Block. And what Trader's Block is, it's me showing you my setups for the week, going into the week, and mainly it's probably going to be options, some maybe shares, but I'll show you my setups, why I made the trades, kind of my thought process behind it. And so next week we'll see how I did on the trades. So yeah, with all that being said, let's get into the video. All right, y'all. So the NASDAQ futures, the last time I looked, was down almost 2%. So for those who are so new to the stock market, you may not know what I'm speaking of when I say the NASDAQ futures. So the futures market is the market. It opens on Sundays at 5 p.m. Central Time. I'm on Central Time, but it opens at 5 p.m. and it's kind of giving you a gauge of where the markets may be heading going into Monday. So futures, they're open. And you can see the futures market on CNBC. You can see it on Yahoo Finance. I am pulling it up right now on, let's see, Yahoo Finance. I did look at it. I glanced at it before I started recording, and yeah, we were down. So speaking of why this is coming up, so last week was a terrible, terrible, bloody week for the stock markets. If you missed it, we had one day last week where the Dow was down almost 1,000 points in a day. The VIX shot up. If you don't know what the VIX is, I'll get into it. It was just a really bad week overall for the markets. And so you're probably wondering why all of that took place the way it did. And we had a multitude of reasons as to why what happened last week. Let's see. Let's bring this up here. Alrighty. So basically, last week the Dow was down 2%, the S&P was down over 2%, the NASDAQ was down over 3%, and the Russell was down 7%. And so what the Russell is your small cap stocks, your smaller businesses. Your NASDAQ is your mega cap companies like your Facebooks or your Metas, your Nvidias. Some of them do overlap. So Apple is in the Dow and it's also in the S&P 500. 500 and so forth. The S&P 500 is your top 500 companies in America, and then you have your Dow, which are like your blue chip companies, your companies that are like your older companies, for example. But yeah, so it was multiple reasons why you had basically. So we started the week out. There was a FOMC meeting, which, if you don't know what that is, the Federal Reserve has a meeting about 8 times a year, and they decide what to do with interest rates, whether they're gonna, raise, they're going to cut, they're gonna leave them where they are. And so there was a FOMC meeting on Wednesday, and there was no rate cuts. Okay, so let's talk about that. Rate cuts. So if you're watching this, you know that inflation, at least how it feels, is at like all-time highs. Everything is high. You go to the grocery store, eggs are $10, $12. Gas is kind of moderated. Gas is not as high. Just services are high. Like everything is just really, really expensive right now. So at the FOMC meeting, a lot of investors after the FOMC meeting, and we'll get into why they thought he should have cut. He did not cut interest rates on Wednesday. He left them steady, or where they are, and he just basically said, the economy and inflation is moderating, but we feel like we kind of need a little bit more data to come in before we do, cut interest rates. Well, that was Wednesday. On Thursday, we had a initial jobless claims come out. And so the jobless claims is just that it's, the amount of people who are saying, they don't have a job anymore. And so what was expected was a lot. Basically, it was more than what actually happened. So let me get into what was actually expected. So with jobless claims came out, and they had an expectation of $235,000, but the actual number was 249,000. So it was a higher number than what was actually expected. So that happened on Thursday, and then you saw this massive, drop when the market opened on Thursday. And then on Friday, the unemployment numbers came out. So it was 4.1% was expected. We are actually at 4.3%. So these two numbers together, and then you had things like Amazon, they missed on their revenue. And then, it's Amazon. Like that basically says to you that the consumer, or like you and I, we aren't doing as good as, maybe the Federal Reserve thought. So that came out. Intel, I don't know if you saw Intel, basically dropped massively. They are cutting their dividends, and they are also laying off like 15% of their workforce. Okay, so a dividend. So a dividend is basically all of the extra money that's left over from a company, and it's almost like a thank you to investors for owning the company. Well, if a company is now cutting the dividend, that says, well, maybe they don't have as much money on hand as, we thought they did, or they thought they did. And so now they're having to cut to kind of try to preserve some of the capital. And then the same thing with the layoffs, the 15,000, I think they actually are laying off 15,000 people. But 15% of their workforce is being slashed. So they're trying to preserve capital. So it was just a week of just bad data for the stock markets. Okay, so so it seems like inflation is cooling, but when it comes to stocks have ran like tremendously the first half of the year. The S&P 500 was up 15%, which your average rate of return is like 12-13%. So you have to ask yourself, how likely is this? How likely are we going to get another 15% run during the second half? And not to say that the S&P is just done, it's not going to go up anymore, but I will say I think that we are probably still expecting the market to continue to pull back a little bit next week was coming up. So basically next week we do have some earnings. We have Disney reporting earnings, we have Supermicro, we have Shopify, Palantir Hood, and so forth. It's not really much big week for any big economic news. And speaking of, if you are wondering how do you go about figuring out how or when they're going to be releasing big news that may sway the stock markets, I always use the site Market Watch. So if you go to Google and you type in Market Watch economic calendar, they're going to put out a calendar for the upcoming week. Usually the previous week is also on there, and then possibly the next week, but you'll get to see, what news may be coming out. Because before I started paying attention to Market Watch, I would be in trades, and especially working. Like if you're trying to work and you can't really watch the market as much as you should or could, Market Watch could possibly save you. So I would be in trades and like a jobless claim number would come out and it wouldn't be in the favor of the stock market. And then I would be wondering why trades would be going against me. Well, that is why. So check out Market Watch. And then as far as earnings, I don't know if I mentioned it to you, but I do not like to trade stocks when they are about to report earnings, because you could have a company that could come out and they could totally miss earnings, but you'll get on the conference call, or you'll hear the conference call at 5 o'clock. And the CEO will say, well, we're expecting to grow our business 100% next quarter. And then your put that you bought, because you remember I told you in my options video, if you didn't watch my options video, I will link it below. But when you buy a put, you're expecting the market to go down. So your put option that you may have bought on a company may have just blew up in your face because of what the CEO said. So I just think when you do earnings, and you'll hear people say lottos, because that's what they are. You can't really control what happens with your position when people are reporting earnings, unless like if you are in like a long-term play, you're like investing, you're just kind of holding on to shares, or you bought like some leap options, meaning like you bought the options and you're planning on holding them for an extended period of time, like a year or 2 years. Maybe that won't apply to you as much, but like if you're in like a option that's going to expire like that Friday after earnings are reported, I wouldn't touch it. That's just me though. And then also I wanted to mention to you that the VIX spiked to almost 30. So the VIX is the fear and greed index. So when you get to 20, I think that once you're over 20, then you are kind of getting to that spot where people are starting to get worried or fearful. But when you get to 30 or higher, then like you're pretty much in fear territory. Like people are fearful. So the VIX spiked to 30 on Friday. I think I got a screenshot. I will insert it if I can find it. But yeah, it spiked to 30. And so the VIX also has an inverse relationship to the S&P 500. So when the VIX goes up, the S&P 500 drops, and vice versa. So when the S&P goes up, the VIX starts to drop. I think we are gonna continue to have probably a drop in the market. That's just my opinion. It's a lot of negative. It's more negative news than positive news to turn the markets around. Like for example, and I don't know how true this is, but there was an article that came out over the weekend that Nvidia's highly anticipated Blackwell chip is going to be delayed by a few months. And Nvidia weighs a lot on the market. So the markets are already down. The futures market is already down. And I feel like it could be the fact that people they have seen that news and they're wondering like, okay, is Nvidia's earnings going to be as good if they have really delayed the Blackwell chip? And then also there was another news article that came out on Saturday that Berkshire Hathaway, which Apple has been, one of their biggest holdings for years. They sold 50% of their stake in Apple. And if you don't know who or what Berkshire Hathaway is owned by Warren Buffett. And one thing about Warren Buffett is he's a long-term holder. He rarely sells stocks, and he's even said himself that if he cuts a position, it's because something is extraordinarily wrong. And it may not necessarily be with Apple, but it could just be that he's concerned about the overall macro, or the overall economy and what's going on with inflation. So I don't know. We'll see. And I'm not a bear. Like, so you have bulls and you have bears. So a bull is a person who thinks that the stock market is going to go up, and a bear is a person who thinks that the market is going to go down. I'm not technically a bear. I just think that where we are currently in the markets and what the charts have been showing me, because I read charts, I go off what the technicals say. The technicals are telling me that we are probably still due for more pullback in the market. So just remember that when you're putting on your trades this week, if you are trading, just be mindful if you're trying to take long positions, because you could see like a little bounce in the market, but that doesn't necessarily mean that the trend is changing. Right now, the trend is we're pulling back. So yeah, I wouldn't try to catch a falling knife, but that is just me. So I have my trade station pulled up, and I am currently in about 3 positions. I am in 3 positions right now. So I am in a Netflix put. I am in a Nvidia, 2 calls on Nvidia, and then I'm also in a SPY put. All right, so my thought process. So I'm gonna chart basically where I got in it on Netflix. Let's see. Let's bring this down. So basically, I got into this position on Thursday, I believe, when the market was starting to drop. Okay, so basically, so right here where I drew this line, so the price went down, and then this right here was a level of support, or where people were buying. So the price came down here, it stopped, and then it went out. Well, here, a couple things happened. So these are moving averages here, in which I am more of a supply and demand trader, but I do look at moving averages, and this is the 9 and the 20-day exponential moving average. So here you can see that the 9 crossed below the 20. And then also the demand right here, the level was broken. So price went down, it stopped, and then it came out. Now here, this was on Thursday. You saw that the price kind of shot up. This was after that initial jobless claims, but then it bounced like right when it got to the 20, and then it started to come down. So this is actually where I got into the trade. I bought a put, and then we're coming down here. So I bought out of the money puts, but I did buy some time. I think my puts, I want to say they expire October. So I did buy puts. And then this is my take profit level down here. This line here is the 200-day moving average. And so I'm basically going to hold Netflix until it hits about the this is like the 550-ish area. Now, if it comes down here, and then if I see that, the volume is high, momentum we're moving with momentum, and we're starting to break through it, then there is a gap here that I think could be filled. Let me draw this line for you. So right here. So basically, if we drop below this zone here, I think that we could potentially fill this gap down to the 492 area. So that's just my take on Netflix. I'm holding. I'm not doing anything with this position. I'm not going to micromanage it. I mentioned that I do like to swing trade, and I like to swing trade because I do not like to look at charts all day. That's just me. And then next up, I'm going to bring up SPY. So SPY. So here, I got in on this position. When did I open SPY? I think I opened SPY on Friday, actually. So basically, let me chart this, because I charted this on my phone, but my lines always disappear when I come on the app. I mean, on the desktop version. So basically, there was a little seller's gap here. It's a small seller's gap with price gap down, and this was last week or the week before. And so you can see here that price went up, it stopped, and then it started to come out of here. So I actually think I bought this position on Thursday. Yeah, I bought this position on Thursday. So it was coming out of here, and then the next day it actually gapped down here. No, I bought it on Friday. I did. I bought it on Friday. So yeah, I see that, we got another gap down here, and I'm thinking that we're probably gonna move. It's a small buyer's gap down here at the bottom. Let me show you where it is. I think SPY honestly could probably come down to around the 510 level. Give it a little time. I think it'll happen. But yeah, because all of this to me is just noise. This is not really good like demand levels. So I think that we'll probably possibly trade down to the 200-day moving average, which is here. And yeah, I think we could possibly see 510 here shortly. But we'll see. We'll see how it turns out. And then the last trade, which I'm up on Netflix and SPY slightly, not much, because I did buy out of the money puts on both Nvidia. So Nvidia, I'm down on this trade. I bought calls, and I've been in this trade since I want to say Wednesday. It looked like it was about to break out, and so I actually bought a call here on Wednesday. I bought two calls actually. And so one of them actually expires on Friday, and then the other expires later on, like in the end of September. So my call option, honestly, in Nvidia may be worthless on the one that expires this Friday, but it's fine. And then the call option that expires in September, I'm just gonna hold it. They were actually both at the money options, so it is what it is. That's why I always tell you, risk management is like super, super important. But yeah. So Nvidia, I think that, if we do see a slight rebound, it may come up to the 9-day moving average, exponential moving average, and I think we probably see it bounce off of this level here for a little while before it rebounds. But who knows with Nvidia could come out with some crazy news, something big about the stock, and it could easily reverse. But yeah, I think the overall market is headed down right now. That's just my opinion. But yeah, so overall going into this week, I fully transparent, I am currently down like $300. But anything could change, especially, if the markets continue to go down. They are currently down now. My put options could be worth a lot more when the market opens in the morning. And yeah, you just never know. But I will update you guys on next Sunday. So yeah, you can see here that, let me show you. So you can see here that I am currently down. I told you I have a Netflix put, a 540 put. It's up $153. I have a SPY 490 put that's up $37. And then I have these calls on Nvidia. One expires in September, and then the other expires on Friday. And then my Netflix and my SPY puts actually expire September the 20th. So I'm holding them for a little while. I'm not going to do anything with them. But we'll see. You see I'm down 374, but once again, that could change on tomorrow. Really, anything can happen. So we'll see. I'll update you guys. All right, guys, thank you for once again tuning in to another video. This was the very first new money stock series. I thank you guys so much for tuning in. The purpose of this, once again, was just to kind of give you a quick rundown of what happened last week in the markets, what's going on this week, so you can kind of be in the know of why things happen the way they do, and that way you can kind of get used to, training your mind to understand why things are happening the way they are. I hope that next week I can get this out to you a little bit earlier. Forgive me for that. Things kind of popped up today, but it is what it is. I thank you guys for watching. Please, once again, like, subscribe, share this video, help me get to my 500 subscriber goal, and I will see you guys on next Sunday.